Well, an awful lot has happened in the first few months of this year. First of all, of course, we've been back in lockdown. That's inevitably meant that we've had another fall in output. The good news is that the decline has been a lot less than that occurred last spring during the first lockdown, more confined to the sectors that most directly impacted by restrictions. We know GDP fell in January, but by less than expected. The indications are that output rose in February and March, even before a proper ease in restriction. And secondly, the government's announced its plan for the sort of easing of restrictions in England, and the devolved administrations have done similar things for the rest of the UK. We've already had some changes to restrictions, and more to follow in April and May. And by June, it's hoped that things will be back close to normal. So exactly what normal means in this new environment is uncertain. Third, the government has confirmed that most support measures will stay in place for several months. And they've also announced further support measures to boost business investment. For the rest of the year, from Q2 onward, our expectation is for a sharp recovery in output and for the recovery to gather pace through the second half of the year. That is, of course, dependent on several factors, most importantly, what happens with the vaccine rollout. And there are uncertainties out there, but overall, we see grounds for optimism. Well, we expect a significant rebound in output as restrictions are eased, and that seriously gets underway from mid-year onward. Now, what is that dependent on? Well, a number of factors, but first of all, of course, it's dependent on the successful vaccine rollout, and that we don't have a return to lockdown because of another wave of COVID-19 cases. Secondly, it's dependent on consumers and businesses being confident enough to spend. I think the signs on this are good, particularly for consumers. Last time round, when restrictions were eased, they were prepared to spend. This time round, we see evidence of forced saving and pent-up demand. So we are very confident that consumers will start to spend again in the second half of the year. The outlook for businesses is a bit more uncertain. As last time round, they were a bit wary about spending, but the government has introduced support measures, particularly to encourage business investment. So we do feel more confident now that businesses will spend again. What could go wrong? Well, a number of factors, but in particular, I'd point to the labour market. There's a lot of concern that as the furlough scheme will be wound down, that we could see a rise in unemployment. The government has announced an extension of the furlough scheme, which is a positive, but there's still uncertainty about the outlook for the labour market, and that could have knock-on effects on the economy as a whole. Our latest business barometer for March showed a significant improvement in business confidence. As the chart shows, there was a big improvement in firms' expectations about their own situation and about the economy as a whole. We also saw improvement in expectations about employment and pay. So overall, it was a pretty good report. If we look at it by sector, there was an improvement across all sectors. Similarly, there was an improvement across all 9 English regions and in Wales and Scotland. So only in Northern Ireland was there a small fall. Now, I'd add a couple of caveats to that. First of all, confidence is still not back to the long-term average. Secondly, firms continue to point to issues about costs. This seems to be linked to an increase in commodity prices, but also to shipping issues because of restrictions linked to COVID-19. As a result, they're forced into a situation of either putting up prices or taking a hit to profit margin. So this is definitely something to keep an eye on, though it may go away as restrictions are eased. However, just to conclude on an optimistic note, overall, we were very happy with the report, and we think that it confirms our expectation that things will improve significantly in the second half of the year as restrictions are eased.